Kia ora and hello everyone. Welcome to this webinar which focuses on financial reporting requirements for incorporated societies. My name is Gali Sleusberg and I'm a technical director here at the accounting team of the External Reporting Board, or XRB. I'd like to introduce my colleague Alex Stainer, who will be doing the main part of the presentation today. Alex is a project manager here at the Accounting Standards team. He's a chartered accountant and he has previously worked in practice for over a decade before joining us at the XRB. Alex has been leading our work relating to incorporated societies for a number of years now. And I think we have a number of representatives of incorporated societies attending today, along with accounting practitioners. So we'd just like to acknowledge the very important work that you do that makes a big difference in our communities. It's great to have the opportunity to discuss financial reporting requirements for incorporated societies with you. So thank you all for attending. Before we start, just wanted to mention a few sort of standard housekeeping matters. So firstly, the slides and the recording of this webinar will be made available on our website. Also, if you have any questions during the presentation, please put them into the Q&A function in Zoom, and we'll answer those at the end of the presentation. Just as a caveat, though, we are not able to provide accounting advice or to give specific information about how the accounting requirements apply to your specific situation. So we can only give information about the requirements in our standards more generally. Also, please ensure that your videos and microphones are turned off for this session if you can. And just a heads up that we will be sharing a link to a survey on this webinar at the end. So if you could give us feedback on the webinar, that would be great. And also to let you know that we will have some polls running during the presentation. And so if you could respond to those when they come up on the screen, that'll be great as well. So now just before we move on to the main presentation, I appreciate that some of you may not have engaged with the External Reporting Board before. So we've got a couple of slides just to give you a bit of context on who we are. So this slide outlines our purpose and the outcomes that we seek to achieve. And then the next slide just goes through how we fit into the New Zealand reporting environment. Briefly speaking, the External Reporting Board, or XRB for short, is an independent Crown entity. By legislation, we are responsible for setting and issuing financial reporting standards, auditing and assurance standards, and climate-related disclosure standards in New Zealand. And Alex and I are from the team that looks after the development of the financial reporting standards. So in setting those standards, what we aim to achieve is that information reported in external reports is trusted, informative, and can be used for effective decision-making. Registered charities and public sector entities, as well as large companies, have been required to use our financial reporting standards and have been doing so for a number of years now. And now, with the new Incorporated Societies Act 2022, some incorporated societies will also need to report in accordance with our standards. And then just in terms of how the XRB fits into the New Zealand reporting environment, it's important to note that we as the XRB only decide what information needs to be reported by those entities that use our standards. So we don't decide who must report using our standards. That question is determined in primary legislation. So for incorporated societies, the Ministry of Business, Innovation and Employment, MB, have developed the legislation, the new Incorporated Societies Act 2022, and that act sets out which incorporated societies have to report using XRB standards. Where the XRB comes in is in setting the accounting requirements that apply to those incorporated societies that are required by legislation to apply our standards. As Alex will explain, we have different tiers of reporting standards to help balance the costs and benefits of reporting. So now that you've heard a bit about us, let's hear a little bit about you and your role in your incorporated society. So I'm just going to run a quick poll and let's hope the technology works. So if you could just let us know your role, just to give us an idea of who is attending, that'll be great. And I'm going to close the poll in a few seconds. You just send it here. Great, says here we've got a few treasurers, committee members, and advisors. Great notes. Good to see you all, and thank you all for attending. And now I'm going to pass on to Alex to go through the main part of the presentation.
Cool, thanks, Gali, and hi, everyone. So in terms of what we're going to cover today, I will briefly touch on the background to these changes, but we will be largely focusing on the new financial reporting requirements, looking into the legislation, seeing how that sends us through to the XRB framework, and then how to navigate through the XRB framework to understand which accounting standard you apply, and also cover off some of the first time application considerations that you may need to be thinking about. So in terms of the background, the new Incorporated Societies Act of 2022, it has been introduced to replace that previous act, the Incorporated Societies Act 1908. So obviously that older act was over 100 years old, and on the back of a review undertaken by the Law Commission in 2013, they recommended that as it was outdated in parts, that it could be modernised, and in particular could have some clearer governance requirements. So over a process that's been for the last 10 years or so, the Act was drafted, and this new Act has taken effect in October 2023. And as many of you are experiencing, there are several implications for incorporated societies. You'd be subject to some new rules, and it's very likely that you've been having to update your constitution to account for those new rules within this Act. And of course, there are new financial reporting requirements, and we do acknowledge that this is just one part of the greater change that you've been having to deal with over the last wee while. So in terms of the financial reporting requirements, incorporated societies previously, you've been subject to the old Act, and within that old Act, they listed out what you needed to include in your financial statements. So you would have been subject to that, but you may have also had some other requirements as agreed in your own constitution. But this means it's very likely that a number of societies have never had to engage with the External Reporting Board or the standards we issue. So with the new Act introduced, there is a 2.5-year transition period where it replaces that old 1908 Act. And so what this means is that if a society wishes to remain incorporated, it will need to re-register by April 2026. And we're just going to pop up another quick poll just to see, give us an indication of kind of where you may be at within that process. There's only a few more months left until that deadline closes. And we know that across the board that there probably still is a significant amount of incorporated societies that still need to re-register and go through that process. So sorry, hopefully that has come up now. Cool, and just a point while you're having a look at this poll for me is that only once a society re-registers do the rules of that new Act take effect. And so only from that point onwards will those new financial reporting requirements need to be followed. I'll just pause here very quickly before I introduce the financial reporting requirements. It looks like we've got quite a few have answered on this poll, so thank you for contributing. A number of you have now re-registered, which is really great. And I think that's really good because it shows that you're then ready to look at these financial reporting requirements. We know that there's been a lot of change in terms of some of those other things that you've had to deal with within the Constitution itself. Very good. Okay, cool. I will now move on to the next slide. So what are the new financial reporting requirements? So in summary, some incorporated societies will need to prepare financial statements in line with XRB reporting standards. However, not all have to. And there is one exception to that. And it's those societies that meet the criteria of a small society, which is now defined in the new Act, and they can choose. So they can choose to follow the requirements set out in Section 104 of the Act, or they can choose to use the XRB reporting standards. And I also just want to note that if you are a charity, which many societies are registered charities, you would continue to follow the financial reporting requirements of the Charities Act. For slightly more detail, I do want to refer to the legislation. And as you can see here, the legislation refers to preparing financial statements in accordance with generally accepted accounting practice, or GAAP for short, and that's for specified not-for-profit entities. And for a small society, we can see that you can prepare in line with GAAP or a non-GAAP standard, or the requirements set out in Section 104. And for any other case, it's GAAP or a non-GAAP standard. And the reason that I wanted to highlight this is that where GAAP or a non-GAAP standard is referred to, it has been specifically defined by legislation to mean the applicable financial reporting standards issued by the XRB. And so I just want to reiterate that point, that incorporated societies that do not meet that criteria to be a small society will need to apply the XRB standards, whether it is GAAP or a non-GAAP standard. So I will tie in what a not specified not-for-profit entity is in a later slide, and a little bit more information about GAAP and a non-GAAP standard. And so we'll come back to that shortly. And also just want to note that Section 108 provides the detail on where charities should continue to apply the requirements of the Charities Act. Now, before moving into the XRB standards, I just want to briefly cover what a small society is. So as noted previously, this small society has been carved out from needing to apply XRB standards. And to be a small society, you must have both your operating payments and your current assets of less than $50,000 in each of your last 2 accounting periods. And you also must not be an approved donee organisation or a registered charity or an approved donee organisation. Now, I note that operating payments, these are the total of your expenses that were actually paid during the year, so either in cash or from your bank account, but it does exclude your capital payments such as purchasing assets or debt repayments. And then in respect of current assets, these have been defined in the regulations to the Act, specifically for this criteria. And current assets will be those assets that you expect to use, that they get consumed or they get sold or disposed of within 12 months after your society's financial year end. These assets might also be primarily held for the purpose of being traded, or if it is a bank account, a deposit, or something similar, it must not be restricted in use for at least 12 months after your society's financial year end. So ultimately, if you are a small society, you can choose to prepare your financial statements in line with the requirements set out in the Act, or apply the XRB standards. So I'll just quickly show what those minimum requirements are. So in Section 104, these requirements, it's interesting to note, are practically the same requirements as in the old Act. So they will ask for information on your income and expenses, your assets and liabilities, and information about any security interests you may have on property over the society. So for those societies that meet the criteria and do elect this option, nothing much changes. You can largely continue to prepare your financial statements in the same way that you've always done. But for all other societies, you will need to apply the XRB standards. And for context, the XRB does issue financial reporting standards across several sectors. And to work out the specific accounting standard you need to apply, you'd first identify which sector applies to you. Now, we note that most societies will be not-for-profit entities for the purposes of the XRB framework, and therefore you can apply the accounting standards or financial reporting standards of the not-for-profit sector. And we expect this. We expect that most societies can safely assume this based on the primary nature of what most societies do and what they've been started for. The XRB considers that a not-for-profit is an entity that aims primarily to deliver goods and services for community or social benefit, rather than with an intention to provide a return on equity to equity holders or that sort of similar holder. And so I guess the key point that I want to reiterate here is that it does, if you generate surpluses, it does not mean you cannot be a not-for-profit. It more comes down to your intention to how you're going to use those surpluses and those profits. So within each sector, there can be a diverse range of entities. There can be some very large and some very small entities. So our standards are grouped by reporting tiers, and these scale the requirements based on the size of an organisation. So on this slide, I have outlined the reporting tiers for the not-for-profit sector. And as you'll see, there are 4 reporting tiers. So upon needing to apply the new financial reporting requirements, you would need to assess the current year that you're going to report in your financial statements in respect of these tiers. So tiers 1 and 2 are for larger organisations, and they are subject to slightly more complex requirements, which are based on international standards. So this is considered, and these are considered to be following generally accepted accounting practice, or GAAP. We only expect a very small portion of societies will need to apply this tier. And then tier 3 is for the mid-range to smaller organisations. The tier 3 standard is again considered generally accepted accounting practice. And then tier 4 is for our smallest organisations. And the tier 4 standard is considered a non-GAAP standard. And that standard has been designed to be applied by those without any expertise in accounting. And we do actually expect that out of those societies that are required to apply XRB standards, that the majority may fall into this tier. So to tie this back to the financial reporting requirements of Section 102 of the legislation, a specified not-for-profit entity is required to apply generally accepted accounting practice. So that would be tiers 1, 2, or 3. And a specified not-for-profit entity is an entity who, in the last 2 accounting periods, had total operating payments of more than 140,000. So we can see that that threshold of our tier 4 effectively correlates with that definition and sends a specified not-for-profit entity to apply tiers 1, 2, or 3. And just another point in terms of these thresholds, for societies that may own or control other entities, the reporting tier should be assessed based on the total expenses or your total operating payments of your consolidated or group position. So this would mean the sum of your total expenses and operating payments across the society and the entities that it controls. And now I think I'll just put up another poll here. And this time it's just going to ask for an indication of where you think you might fall. And just while you are completing that particular poll, I just want to have a final point. If you have public accountability, you will be required to apply tier 1, but please note that public accountability is a specifically defined term in our accounting standards framework, which is in a document called XRBA1 published on our website. And you should not take a general meaning of this term when making an assessment of whether you are publicly accountable or not. This definition will, looks for whether you issue equity or debt instruments to the public, or if you hold assets in trusted capacity for a broad group of outsiders as a primary business. Cool. All right, I'll just pause there and end the poll. It's great. It seems that we have a number within tier 3 and a few in tier 4 and a few actually in the small society as well. So thank you for that indication. That's really good. And I guess that sort of sends us over to the next slide, where I'm just going to outline those tier 3 and tier 4 standards. So the tier 3 standard, it's important to note that this is a single standard. So you do not have a suite of standards that you need to be looking at requirements for. All your requirements will be in one place. It is accrual based, so you're recording your transactions, such as your income and expenses, as they occur, not necessarily when cash comes in or out of your bank account. And so that means you'd be recording items such as depreciation, your accounts receivable, accounts payable, prepayments, those types of entries. Now, for first-time application, there is concession. These requirements are outlined in Appendix C of the standard. However, the transition requirements generally allow you to attach your previous year financial statements and accounting policies instead of applying the Tier 3 standard to your previous year. Now, where I've been using the term financial statements, the standard refers to them as a performance report, and the performance report will include the following components. So we have a statement of service performance, and now I realize that this may be a statement that not many societies have completed before. So this statement comprises non-financial information, and so you'll be asked to describe what your medium to long-term objectives are, and then what significant activities have you undertaken during the year, and provide a measure of those that sort of demonstrates how you're progressing towards those objectives. Then there is the statement of financial performance, financial position, cash flows, accounting policies, and notes. And I guess just to reiterate that there is, the statement of cash flows may also be something that may not necessarily have been common to have been applied previously. So you may want to give the statement of service performance and cash flows a little bit extra consideration on your first time application. And another point that I want to raise, which I will go into slightly more detail in another slide, but the standard does prescribe the use of specific categories for grouping your revenue, your expenses, your assets and liabilities into. And this, again, could be quite a change compared to how you may have prepared your financial statements previously. So over to Tier 4, again, Tier 4 is a single standard, so all your requirements in one document. Now, this standard is actually cash-based, so transactions are only recorded in your financial statements when cash comes in and out of your bank account. And we do understand that many societies may have been applying accrual accounting previously that fall into this particular tier. And I guess if you wish to continue applying accrual accounting, we would suggest considering opting out to apply the Tier 3 standard. And for first time application, again, instead of applying the Tier 4 standard to your previous year, you can attach your previous year financial statements instead. Now, it does require the preparation of a performance report, which includes these components. So we can see that generally less is required than the Tier 3 standard. Still requires a statement of service performance. However, here it's just been scaled back to require information just about the activities that you've undertaken during the year and a measure on those. Now, there's also a statement of cash received and cash paid, and then a small amount of information is asked to describe your accounting. And in here, it will ask you to note that your accounts are prepared in line with the Tier 4 standard, being prepared on a cash basis, whether they're GST inclusive or exclusive. And if you do have some significant assets and liabilities that are listed in the standard, it will ask you to place a value where you could beside those. And finally, there's transactions with related parties, if any. And just one last thing, I guess, on the standard before I move on, it again prescribes the use of specific categories for grouping your cash receipts and your cash payments into. So when do these new financial reporting requirements apply? So as noted before, these requirements only take effect once your society has re-registered under the new Act. So from that date, you must apply the requirements to the preparation of your next set of financial statements. So as an example, if your society has a financial year end of 30 June, decides to re-register in, say, December 2025. Now, if you had already completed your 30 June 2025 financial statements prior to re-registration, then you can apply the requirements to your next set of financial statements, which would be your 30 June 2026 financial year. And one final point is that the financial statements and the annual return must be completed and filed within 6 months of your financial year end. So there is a bit of a timeline you need to follow and be aware of. So if you're re-registered and you're looking at first-time application, I did want to bring up a couple of things around what you should consider. So one of these first-time application considerations I'd like to raise does relate to the use of categories within that Tier 3 and 4 standards. These standards are quite prescriptive in terms of how you should present your revenue and expenses, or your receipts and your payments. And I'll use the revenue categories to showcase this. So when preparing your statement of financial performance, your statement of cash received and cash paid, your society would need to classify your revenue using these categories. And I've highlighted these particular revenue categories in the table on this slide. And what you will note is that Tier 3 and 4, they do closely align. They have very similar themes. So revenue or receipts from donations, grants, service delivery contracts, membership fees and subscriptions, revenue from commercial activities, and revenue from investment activities. So some key things to understand when you are applying these is that you should not combine or split categories in the statement of financial performance or in the statement of cash received and cash paid itself. If you are looking to provide additional detail, such as a breakdown of one of these categories to show the different items that make it up, you would need to do so in the notes to the performance report. Now, another thing that's really important is that the names of these categories can be changed to be more understandable. And that's, I think, a really important point for societies transitioning here, is that you can tailor these as needed, but be aware that you should still maintain the separate categories of the standard. And given those factors, some judgment will likely be required in how you select the appropriate categories and whether you rename them. Oftentimes two societies may have a similar stream of revenue, but the purpose behind that activity may actually dictate that it gets differently categorized. So just be aware that your judgment will be really important as you go and classify your revenue to these categories. Now, another thing to bring up is that for societies, we do expect revenue or receipts from membership fees and subscriptions to be quite common. But we also expect it may be quite common that revenue from some of your activities may not necessarily be a donation or a fundraising activity. It may not be a grant or subject to a contract, and it may not be completely commercial in nature. So if your revenue does not appear to match one of these categories, we do want you to consider whether the activity you've earned the revenue or cash receipt from directly helps to achieve the society's purpose. And to illustrate that, I guess, commercial and fundraising activities often raise funds to support an organization's service delivery or purpose, but they may not deliver on that purpose in themselves. And we do see this quite often in the charitable sector where charities are raising funds through fundraising or commercial activities to then be able to provide their service delivery or their purpose. We do note that it could be quite common for incorporated societies to also generate some revenue from these types of activities. For example, a sports club may earn revenue from hosting tournaments, skills programs, competitions, maybe a prize giving event. And quite often these activities, they're separate from those activities that are covered by your membership fees and your subscriptions. They typically align with that club's purpose of what they were set up to do. And they may not, in some cases, be necessarily run as a commercial or as a fundraising activity, but they are still generating some revenue. So in circumstances such as these, I just want to make you aware that you can look to be coding this type of revenue to service delivery grants and contracts. And that's even the case if the revenue or receipt does not relate to a grant or contract itself. So I think a really important point here is to remember that you can rename these categories just to make it clearer for your readers. And finally, just very quickly introduce some other high-level things to consider from a financial reporting perspective, particularly with first-time application in mind. So the first one I want to cover off is accounting for interest in other entities. So tiers 1, 2, and 3 of the XRB accounting standards. They include requirements for consolidation and for the accounting of interests in other entities. And determining if these requirements apply to you is not necessarily straightforward. So if your society does need to apply these requirements, you may well need information from other entities before you can actually complete your financials. Now, in terms of service performance reporting, which I kind of covered briefly, that tier 3 and 4 level, I think another important point is just to consider what your members' expectations may be on what your measures are around your performance and whether you have the data required to be able to report on what you want to report on. And I note that if your society will be subject to an audit, your statement of service performance will be within the scope of that audit. So it might be worthwhile having an upfront discussion with your auditors about the support required to substantiate your disclosures in that statement. And finally, in terms of the other items, you may have included other information that's in your previous reporting that's no longer required. We do understand that many societies may be reporting trading accounts for bars or for livestock, or have reporting segmented by membership classes or by membership or non-membership activities. So applying our standards does not mean you must exclude this information, because our standards really set those minimum requirements, but it is worth considering how you incorporate that information in. You may consider, do you still want to be presenting that information to your members? Could you be reporting it separately, or, whereabouts in the notes, and how are you going to integrate that in? And lastly, time and effort of first-time application. Some of these changes may be more significant for some societies, and the impacts may be more significant. If you are being audited, or you have specific issues or complexity, and also just note that there is that set timeline of when you need to have your financial statements completed and filed. So that really is everything from me and what I wanted to cover in this session. So now I will hand back over to Gali. Thank you, everyone.
Thanks, Alex. And actually, if you want more information on any of the topics that Alex covered, please have a look at our website. There's a link to the Incorporated Society webpage on our website on the slide. And if you prefer, there's a QR code as well. So on the website, we have the standards themselves, and we also have some optional reporting templates for tier 3 and tier 4 not-for-profit entities, and also some staff guidance material that could be useful, hopefully will be useful in applying our standards. So now I think we're getting close to the end of the presentation. Let's have a look at some of the questions that are in the Q&A. So Alex, I might get your help in answering these ones. So we've got a question saying, if small societies are carved out from applying the XRB standards, then what do they apply? And I think you covered it in the slide, but maybe can you remind us?
Yeah, so small societies have a choice. So they can choose to apply the XRB accounting standards, or within the Incorporated Societies Act 2022 itself, within section 104, they state the information that you must include in your financial statements. And this includes, it's very general, it includes income or expenses or receipts or payments, assets and liabilities, and any information or description of mortgages or other security charges held over property of the society. So it's quite open-ended, but ultimately, if you have been preparing financial statements previously, you should be able to continue in the same manner that you've done. If you are interested in more about that, I believe the Companies Office, who administer the Incorporated Societies Register, have more information around small society requirements, and they even provide some information about what you need to do and potentially even a template maybe up on their website.
Great, thanks for that, Alex. We've got another question here. If a society is re-registered on the 15th of March 2025 and the balance date is 31 March 2025, do they need to prepare PBE reports as at 31 March 2025?
Cool. Yeah, so once you re-register, the financial reporting requirements kick in for your next set of financial statements that you need to prepare. So in this particular case, yes, for your 31 March 2025 year, you would then be subject to the new financial reporting requirements. And so if you then did not meet that small society criteria and you're required to apply the XRB standards, and it looks like potentially tier 1 or 2, then you would need to apply our standards for that financial year. And I guess just in those circumstances, I think it's always useful to understand what concessions you may have. So at tier 3 and tier 4, you may have a concession where you do not need to apply the standard to your previous financial year when you're preparing those current year financial statements, as long as you attach your previous year financial statements. And I believe tier 1 and 2, there is a standard that sets out your first time transitioning to the PBE standards. So there's some requirements set out in there.
Great, thanks for that. I think that may have possibly covered another question that we received about a society that hasn't quite re-registered yet, but about to do so very shortly, and whether they can still apply the old standard for the 2025 year, or do they need to apply the new standard? So I think it depends again on what you said. If it's, I suppose, depending on the timing, is it before the year end or after the year end?
I think if you complete your financial statements before you re-register, then it would be fine to be doing it under the old way. And then once you've re-registered, you then apply the financial reporting requirements going forward. So if you've already completed that 2025 year prior to re-registration, then you can go forward and apply the new requirements to your 2026 year. If you don't complete those 2025 year requirements by the time you re-register, then the new requirements will kick in for the preparation of those 2025 financial statements.
Great, thank you very much. And now we have I suppose, an audit-related question. Will tier 3s require annual external audit accounts? And there are specific thresholds in the Incorporated Societies Act relating to when an audit is or isn't required.
Yeah, that's right. So the regulations to the Incorporated Societies Act set out what is required by legislation. And so the threshold that they set out is that an entity and all entities that it controls, in its last 2 accounting periods, if it has operating expenditure over $3 million, then it will be required to have an audit of its financial statements. So for some in tier 3, because the tier 3 threshold is under $5 million of annual expenses, for those in that kind of top half of that tier, you potentially may need to, or you may well need to be audited based on the legislation. I do note that quite a few societies may have been in agreements within their own constitution whether they get an audit, and that may be something many societies are revisiting as part of this re-registration process and seeking a bit of legal advice to understand the implications of changing some of those things within their own constitution. But yes, the only legislative threshold is that $3 million for operating expenses in your last 2 previous years.
Great, thanks, Alex. We've got a question here also about what would be considered to be revenue from commercial activities, as opposed to sort of commercial activities, but ones that directly relate to your service activity. Nothing relates to something that you sort of covered, but there's a bit of judgment there, isn't there?
Yeah, and I mean, I assume we're going to be talking tier 3 here. And so those requirements talk about, the activity. It might be an ongoing commercial activity that's looking to raise funds to support the delivery of your service. Whereas the difference that I was trying to describe might be that you might be running an activity that in itself is actually, contributing to the achievement of your society's purpose, in which case it would be more equivalent to a service delivery. So I think that's like a key distinction there. But it will come down to your judgment exactly on, what kind of is going on with that activity and the revenue that you're earning from. Because I mean, even sometimes with fundraising activities, they're typically a little bit more one-off in nature than say a commercial activity, but there can be similarities between these categories. So it will just come down to the specifics of your revenue stream itself.
Great, thanks for that. Another question relating to dates and re-registrations. So this is about a society with a 31 March balance date, which re-registers on the 1st of April 2025. The question is, would that society have to file its financial statements under the old act before it can re-register, or otherwise have to file its financial statements for the year ended 31 March under the new rules?
So in terms of the re-registration requirements, it may be best just to double check that with the company's office. But from our understanding is that, once you've re-registered, then those new reporting requirements kick in and take effect. So if you have a 31 March balance day and you re-register on 1 April, it's very likely that you wouldn't have completed those 31 March financial statements prior to that date, and therefore you would be looking to prepare them under using the new financial reporting requirements from there.
Great, thank you. Another question is about reporting in a higher tier. So if we elect to report in line with a higher tier standard, do we have to follow all the requirements of the standard?
Yeah, that is the case. So if your tier will fall into tier 4 and you decide there's some elements of tier 3 that you like, ultimately, if you're opting out, you will have to just apply that tier 3 standard. But if you're in tier 3 and there's some elements of the tier 3 standard that don't quite work for you, and there's some guidance in the standards on tier 2, tier 1 and 2, then there is an allowance within that tier 3 standard where you can look to apply tier 2 standards to particular classes of transactions. So not always the case. However, if you're ultimately fully deciding to opt out, then you would need to prepare financials in line with all the standards of that higher tier.
Great. I think that's all the questions we had. And we're getting close to the end of our allocated time. So I think if anyone has any other questions, please feel free to drop us a line at the email address that's on the slide. And there's no other questions. I think I'll just say thank you very much to you all for attending. And yeah, please get in touch if you have any questions, and look out for any updates on our website. Thank you very much and have a great day, everyone. Bye-bye.